Hey everyone, hopefully you're having a good day. My name's Andy, channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, finding underscore finance. If you want to join our community, finding-value.com, where I dive deeper into all this stuff, looking for investment opportunities, and you've got a special coupon code that you can use for some savings, 50% off the first month only on a monthly membership, and a larger discount on the yearly membership if you'd like to join. So we've got Jay Yang here posting about Naval Ravikant on how to get rich without getting lucky. So how do we do that? It says if you really want to get paid in this world, you want to be number one at whatever you do. And you want to keep changing what you do until you're number one. You can't just pick something arbitrary. You can't say, I'm going to be the fastest runner in the world, and now you have to beat Usain Bolt. That's too hard of a problem. Scott Adams' observation is a good one, predicated on statistics. So let's say there are 10,000 areas that are valuable to the human race today in terms of knowledge to have, and the number one in those 10,000 slots is taken. Someone else is likely to be number one in each of those 10,000, unless you happen to be one of the 10,000 most obsessed people in the world at that given thing. So basically, 10,000 slots that are valuable, and the number one position is taken in all of them. But when you start combining number 3,728 with top-notch sales skills and really good writing skills, and someone who understands accounting and finance really well, when the need for that intersection arrives, you've expanded enough from 10,000 through combinatorics to millions or tens of millions. So it just becomes much less competitive. Also, there's diminishing returns. So it's much easier to be in the top 5% at three or four things than it is to be literally number one at something. Keep changing your objectives until it arrives at your specific knowledge, skill sets, position, capabilities, location, and interest. That's how to get rich. What I've found, if you want to get rich, so to speak, you need to find an area that there's not a lot of competition in, that you can deliver immense value. So if there's a ton of competition and there's not a lot of value to be gained, you're just wasting your time. I mean, that's what I found. So you can dump a whole bunch of effort into some positions and there's absolutely no return. So you don't want to be in a position like that. You want to be in a position where if you dump a whole bunch of time and effort into it, that the payout will be substantial. So you're going to have to take risk because if you're not good at it, you're not going to get a good payout. But if you're exceptionally good at something, you will get a big payout. So that's what I would suggest. Um, People at work, they would spend all this time going to get a master's degree, go learning all these different skills, and then you just get zero payout. They work longer hours and then they got paid like 10 or 20 grand more than the job they had before. And it's like on a per hour basis, I mean, you're basically at a wash at best. That's something that I never understood. Patrick says Nancy Pelosi makes $174,000 a year, yet her net worth is 413 million. Her portfolio did 78% return in 2024. She's either insider trading or the greatest investor of our era. Think about that. Think about all the great investors that we looked at on like the diagram of how long and the return that they compounded. She's beating everyone. You think that's just by happenstance? Curious. Here's Andy Scheckman. He says, if you save in dollars now, you're destined to go broke. With 37 trillion in debt and slower treasury demand, the dollar is being bled out. Stable coins might prop up the illusion, But central banks aren't buying dollars; they're buying gold. Yeah, I would agree. I think with an increasing, so it's all interconnected, guys. Everything is interconnected here. The dollar getting weaker is interconnected with interest rates. Interest rates are going up because nobody wants to buy dollar denominated debt. So if you have inflation, no one wants debt. If no one wants debt, interest rates go up. If interest rates go up, you get into this spiral. Then more people are not going to want that maybe bonds because as the interest rates go up, your interest payment or interest expense goes up for the government, and then they have to create more money. So more money equals more inflation. More inflation equals higher interest rates. Higher interest rates brings you back to the beginning of more money being created as they have to cover those interest expenses. And we can't cover that with the debt to GDP where it's at. Then you get in the doom loop. So if you save in dollars, yeah, you're going to get smoked. Great. It's like getting punched in the face. Umesh says, wow, not even a strong earnings report from Cameco. The poster child of the uranium sector could wake up the sector from its recent funk. Wake me up in September, unbelievable. Well, it's not unbelievable. Um, you know, you could give me the information before a release of earnings, and I can't tell you how the market's going to react to it because it's a function of how they did on earnings, but also a function on what's coming and the future projections that the company is making about their own company. Sometimes you release a good earnings and you just get a sell-off event. You buy the rumor, sell the news. Maybe that's what's occurring. Too many people give up too easily. Just because today is down 3-4%, that's no big deal. You kind of just have to be immune to it. Just got to say, you know what? At these earnings releases, you're going to get a whole bunch of volatility up and down. And that's the way it is. I mean, I saw a company today release earnings. Pre-market, it was down 11%. In the middle of the day, it got up to like 6 or 7% positive. And then I think it ended closer to zero. I mean, it was up a couple percent or so. And I just look at that like, my God, that is some serious volatility, swinging over 20%. I think that was probably around 20% from bottom to peak. 20% in a day. Now think about that. I mean, honestly, give it a couple of thoughts. An entire company, after releasing earnings, which, I mean, they like barely missed, is going to move the market cap by 20%. I mean, like, think about that for a second. Do you really think the company should be swinging 20% in a single day off of a slight miss? I don't know. That just seems a little bit weird. But that's also the very thing that gives you the opportunity in the market. It's when everyone goes full stupid. And in Tropic Thunder, you never go full stupid. And I know it's full retard in the movie, but I'm just calling it full stupid. You never go full stupid. Rob Kine says the life of a gold and silver investor. So sideways, everyone gets bored. Bros, what's going on, bro? Bro. When it goes up, we're back. Oh, it's so over as it goes down. And then when we rip high, we're so back. And then it's over, bro, when it goes sideways in a mixed state chopping, it's over. And that's pretty much the sentiment that everybody has. It doesn't even matter if it's gold. It's in everything. It's in everything. The number one thing, if you want to be good, is just to become indifferent during some of these moves. The most important thing is to size up the bull market, to size up the bear market. When things get undervalued, size up the bull market. When things get way overvalued, size up the bear market. And then sit in it for it to play out. Now, I don't really play bear markets. I don't short things. Because if you short something, it can go in the opposite direction for a long way, and you can be really screwed. Because you can lose more than 100% of your money. And In a bull market, you've got asymmetry in your favor. So I'd rather choose everything or look at things that are in bull markets versus bear markets. Coming on down. Marco Kolanovic. Been reading a little bit more from Marco. Our boy, I don't know if he still works at JP Morgan or not. He might. I don't know. Because basically, when you have the largest tech companies add overnight market cap of whole US industry groups or major country indices, Microsoft, Meta, or add a market cap of a whole S&P small cap universe in 3 months, Nvidia, it tells you are close to a bubble top. I agree with them. These things are way overpriced. I mean, they're moving at rates greater than entire industries. Think about that for a second. That doesn't make much sense. But people don't care. If it goes up, oh, it looks good, it's going up. So they buy it. Mr. Uppy, margin debt just hit $1 trillion. Everyone's all in, levered to the gills, a 9.5% jump in 1 month. This isn't euphoria, it's desperation disguised as confidence. How does this end? You already know. Now I just look at the general trend of margin debt. This thing just keeps going up. That's pretty crazy at the rate that margin debt is going up. In the year 2000, looks like we were at 300 billion. So in about 25 years, we've 3x'd margin debt. Maybe we should go long margin debt. Eric Nuttall, TC Energy, natural gas demand is to grow by 45 billion cubic feet per day, 36% over the next decade. While subject to the vagaries of Mother Nature in the short term, we believe natural gas is in a structural multi-year bull market as it has gone from a bridge fuel to the fuel of the future. Yeah, that looks pretty dang bullish. And I agree with them. We're going to burn a lot more natural gas. We got a lot of electricity demand coming. So what should one do? Well, I like the natural gas companies if they're low. Buy them when they're low and just sit and do nothing. Wait for this bull market to play itself out. Um, Herring and Rosenzweig, they'll talk about natural gas, and they say that we could be pretty close to peaking out on natural gas supply a few years out, like 2030 or something like that. So if we're raising 45 billion cubic feet per day by 2035, which is a pretty big number, well, what happens if we can't produce the natural gas? Well, I'm sure natural gas prices would go up substantially, and I would assume that coal prices would too. So I'm kind of positioning for all of this to occur. Sam Altman on why you should work hard at the beginning of your career. It says, one more thought about working hard. Do it at the beginning of your career. Hard work compounds like interest. And the earlier you do it, the more time you have for the benefits to pay off. It's also easier to work hard when you have fewer other responsibilities, which is frequently but not always the case when you're young. Yeah, I would say that's good, but again, I would focus that effort on stuff that has good payouts. If it doesn't have a good payout, then I wouldn't focus the effort into it. So that goes for everything that you're deciding when you're young. If you're young and you're like, well, I want to pick a major, well, I wouldn't I wouldn't pour a bunch of effort into a major that's got no payout. I just wouldn't do it. There's no point to it. I wouldn't learn something that has no utility. Learn stuff that has big payouts. Go after things that make a decent living at least, and that you're interested in. The combination of the cross section of a good living with interest. And if you're interested in stuff that does not pay out, well, then, I mean, you're stuck. Like you're never going to get a good payout then. And maybe that changes in the future. I'm not 100% sure if you can accurately predict a payout of something that may not have a good payout immediately. But there are sectors and industries that I mean they do not pay very well. The S&P 500 is up 57% and has hit 71 all-time highs since Michael Burry said sell. Now, here's my thing. What makes him wrong? What makes Michael Burry wrong? And they're going to say, well, the S&P went up 57%. It's hit 71. That doesn't mean he's wrong, though. What makes something wrong, like you can be logically right and then the price go against you and you could be wrong. But that doesn't mean that he made the wrong decision. It doesn't mean that it's wrong to sell an overvalued asset. So I see this a lot with people, and it's like they use the actual outcome and then say that somebody is wrong when looking backwards. But when you look at the decision that's made by the individual, you could argue it's like, you know what, if I was in that same decision, I would have acted the same way. Now, I'm not saying that Michael Burry is right or wrong here. What I'm trying to say is you can statistically make decisions based off of, a 75% outcome and get it wrong because the 25% played out, right? But you didn't make the wrong decision. And that's where I disagree with a lot of people, and I don't know if they understand what the heck they're doing. So if you have a 1% success rate and you happen to be lucky as all get out and you get the 1%, and let's say you went up 25% in that 1% probability, you still made a stupid decision. I mean, with a 1% positive outcome and you only make 25% return, that's stupid. But it doesn't mean that the outcome will always play out in that person's favor. So even if the outcome played out in a certain way, it doesn't mean that person made the right or wrong decision. What you want to do is you want to get the probabilities on your side. And you will lose some, yes, but that's okay because you're playing the probabilities. The probabilities will essentially carry you higher because you're winning perhaps more than what you're losing. And then when you win, if the probabilities are in your favor and you've got asymmetry, then you win big. You've got probabilities in your favor and the payouts are big. Like that's the spot you want to be as an investor. You don't want to take on infinite risk with a low possibility or probability bet and have super small payouts. That's just stupid. Like there's no way of winning. And that's kind of the way in life that I was describing earlier. People picking like they go through college, they spend all this money, they take on all this debt and risk, and then their payout, it was never there to begin with. They're going to be, I don't know, whatever a lower paid person chooses. I don't know what that industry necessarily is, and I don't want to pick on any one, profession. But that's kind of how I look at life. I mean, everything is about statistics and probabilities. Um, for instance, and I'm just going to give an example of something that I do in my life. You guys can take it or leave it. I shop in the morning when people aren't at the the place for shopping, and it's multiples. I don't like being in a crowded area. I have a faster checkout. I can get my stuff more quickly because people aren't there slowing me down. I have a less probability of getting in an accident in the parking lot because there's less cars there and less cars moving. I have more parking spots. I can and I generally park next to where you put the carts. Like I park a couple away so people don't hit the car, but I park close enough where I can just throw that thing in the cart, where they store the carts and just drive off. So everything I do in life is pretty much calculated to some degree. I mean, there are times where I go and I pick something up and it's during rush hour or busy, but it's the majority of the probabilities that I do. It's like that in everything I do in my life almost. It's called thinking, and thinking reduces risk. That's what Warren Buffett said, I think, quote yesterday or 2 days ago. Reducing risk is about thinking. It's about, hey, you know what? Maybe I shouldn't go here in the middle of night where people shoot at each other. Yeah, no, duh. The markets are the same way. So you could have an outcome, you could have a positive experience at a high risk time where still it's like, you know what? That probably wasn't a smart decision. Or there's a high likelihood that you could get hurt, like dangling yourself off of a bridge. It may feel cool, you might get a rush, but if you fall, it's got a real negative outcome. Here's Reads with Robbie. It says habits that have a high rate of return in life. Now, check this out, guys. This is funny. It says habits that have a high rate of return in life. Sleeping 8+ hours each day. It's 7 or 8 hours. I do that. Lifting weights 3 times a week. I do that. Going for a walk each day. I do that. Saving at least 10% of your income. I do that. Reading every day. I do that. Drinking more water and less of everything else. All I drink is water. That's all I drink. So I do that. I don't drink anything else. Nothing. Leaving your phone in another room while you work. I do that too. What's weird is I do every single one of these things, and this is the first time I've ever read anything about this. I just do it. I think phones are a distraction, and yeah, I'm on it sometimes. Don't get me wrong, but it's a distraction. I don't want the ringing inside the room. I don't like it, so I don't have it in there. So I mean, everything here. This is literally what I do. My dad's friend texted me this. Go over this. Good morning. My brother's looking to do something in crypto, as he doesn't have a lot of money, but this is what he sent me, and I wanted to get your thoughts. I would like to buy 2 or 3 different types. If I buy $300 of XRP now at $3.15 and it goes to $10,000 each, where the experts say it needs to be to operate, that's $1 million in retirement for me. It seems like a wise gamble. $300 isn't a lot to lose, but if it goes to 10K, I can sell a third and hold the rest. What do you think? Well, that is asymmetry that he's thinking about, which is good. You want asymmetry. You want to risk small amounts of money for big upside potential. Um, one thing is that everybody's asking questions like this in crypto. Crypto is where the bubble's at, in my opinion. So I think it's in a bubble. Now, could the bubble keep going? I don't know. Now, why does XRP? They say XRP is now at 315 and it goes to 10,000 each. Why do people think that? But that's where experts say it needs to be to operate. Well, what if it doesn't get there? It doesn't operate? I mean, that seems like a lot of risk. But $300, okay, not a big deal. But this is what people are talking about. This is what's out there. Do you see people talking about oil like that? No, not really, outside of maybe myself. But this is what people are talking about with crypto. That's where the money's funneled into it. Freight futures AM update, dry bulk. We got Capesize up 3%, Panamax up 2%. Tankers, VLCC up 1%, Suezmax up 2%. Another one of Grady's. It says the capital rotation into precious metals started when these ratio charts below turned, which I posted on in real time back then for each chart. Then posted each of these charts when they broke out. The tide has turned. It's happening. GDX versus NDX. And even if this drops down a little bit, guys, it doesn't mean that the trend is broken. So too many people are focusing on the short term and the market movements in the short term. These are long-term big picture charts. Silver versus US stock market, it's broken out. We have to break back below that blue line. I don't think that's going to happen. Even if we pull back a little bit at this resistance, I don't think we're going to break all the way back down here. Gold versus SPY, breakout, back test, confirmation of the breakout and move above the red line. These are all preparing to turn and move higher. And this is the Huey versus the semiconductors. Broken out of the falling wedge to the upside. Everything's all good, guys. It's all good. Powell, inflation is further from our goal than employment. That's why interest rates could maybe even move up. It's interesting. But that's all I've got for today. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website, especially with the coupon code. We've got a question and answer session coming up Saturday at 7 a.m. All right, guys. We'll catch you later. Finding value.